What do President Trump's pro-crypto initiatives mean to the Bitcoin and blockchain world? Today, we invite William Quigley, co-founder of Tether and the Wax blockchain, to the show to discuss the state of Wax, NFTs, meme coins, Bitcoin, Ethereum, and crypto regulation. You'll be surprised at his price expectations for end-of-year Bitcoin, and his take on Ethereum will have you saying, That's what people say when they meet us face to face. It's a look of confusion followed by a prolonged Well, the groundhog has seen his shadow, and so have we. So it's 6 more weeks of winter and an upcoming Kansas City Chiefs Super Bowl three-peat victory on episode number 763 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
That's right. I said it. The Chiefs going in for their third Super Bowl win in a row right here from the Bad Cryptopia Republic place that we live in here, because if not, I'm going to have to live with tears, and I don't want that.
You know, I talked to the missus over there, and I said, "Really, if we lose, is it gonna be that painful? I mean, Jesus, we've
For a
won.
minute.
The Chiefs have been to 5 Super Bowls in the last 6 years, and
Right.
they've been to 7 AFC championships. I mean, dude, literally, I was thinking about this even while the Bills game was going on. I was like, dude, they could lose at this point, and I'm like, yeah, let another team have some. Like it's okay. Why am I being so greedy?
Well, I mean, don't you want the first
No,
team
I'm
to
cheering
have
for obviously
three
I'm
in a
cheering for
row?
my team, but still I kind of go, well, it's man, well, here's the thing. It reminds me of like maybe back in the 1950s when the Celtics won like 8 in a row or something. Could you imagine but that's before social media. That you just read it in the newspaper, really wasn't televised all that much. Celtics won 8 of them in a row. So it is crazy. I just say, wow, if it happens, cool. But now that we're playing against the Eagles, I don't really like the Eagles because their fans are so
Their
shitty.
fans suck.
Their
Yeah.
fans are so loud and obnoxious. And I don't want to say they're all shitty, but I mean, I've just seen so many videos, and I stood by some when I went to the Super Bowl a couple of years ago. They
Mhm.
are so loud and obnoxious until they get punched in the mouth, and then they all quiet down and they all disappear quickly and quietly. It's really weird because whenever the Chiefs came back to win that game, dude, I was like, yeah. And I looked, and they were like, where do they go? Like, where? They're all like,
They
where
flew away.
I don't see one. Like there was still like a minute or something left or whatever. It's like right after the final bomb and like gone. Like they were. I mean, I was like, wow. Like all these.
They
all
flew
this that
like
were
an
around
eagle.
here.
Welcome to the Bad
Wait,
Crypto Podcast.
I do have the Chiefs. Hold on. I do have the Chiefs jersey.
Oh, you got what jersey? From where? From
Oh, I
when?
got the new Chiefs. I got the new Chiefs Super Bowl jersey. Really nice.
Oh, yeah.
That'd be awesome.
For those of you not watching the video version, it is a referee jersey. That is,
Yeah.
yeah. Foul.
Chiefs win.
Flag on the play. No flags in this interview though today. We got William Quigley to come back. It's been a hot minute.
Yeah.
He's been on the show, and man, his stuff got wrecked in L.A. His house burned down. He lost everything.
Was he in the Palisades?
Yeah, it's bad. It's bad. But
I wondered. I
fortunately-
didn't want to ask, but I wondered. I was like, dude, is that like? I hope your ledger wallets or whatever was in a
Yeah.
safe. You know
I'm
what I
sure
mean?
his crypto is secured wherever one would secure the crypto. But this is a really interesting discussion with him, and I want to jump right
Awesome,
into
dude.
it. That's enough
Sure.
Super Bowl talk. Let's get to crypto. And back with us for I don't know what time it is, probably the third or fourth time, but it's been a few years. An incubator, an investor in so many blockchain projects, co-founded Tether as well as Wax, which is a blockchain that we use to do 1.5 million NFTs 2020 and 2021. Mr. William Quigley, welcome back to the Republic of Bad Cryptopia, sir.
Hello. Good to see you guys again.
First things first, I want to sympathize with your plight. I know I was supposed to see you in Miami at the WAGMI conference, and you had to fly back to LA. You're one of the unfortunate ones whose homes got just completely ravaged by the fire. So we're really sorry
Yep.
about that.
Thank you.
Um, I don't know where you go from there. That's a long process. I'm sure dealing with California insurance is going to be a great deal of fun.
Yeah, most people don't have home burned down in their lifetime, fortunately.
hmm
But yeah,
hmm
yeah, the whole city burned.
Well, I know that you are a bounce back kind of guy, and
Yeah.
glad that you're here and that you're still building. And I want to start with Wax, okay? Because Wax is the chain that we chose to release our NFT projects on. In fact, we were the first major project to release on Atomic Assets back in 2020, and we released I think 10 different series, all of, but the last one completely sold out. And I miss the good old days of pack rip, and Wax seems to be
So true.
languishing right now, and there's so many alternatives in the NFT space. I know you are probably optimistic about the future, but why don't you kind of tell us what happened to Wax and how are you guys working to rebuild for the future so that it's still a destination for people to create NFTs amongst other things?
Yeah, I'd say you're right. I mean, Wax really invented the concept of this consumer mass market NFT phenomenon in 2020 when we did the Tops, the baseball card company. We did a Tops drop with Garbage Pail Kids, that kind of 1980s brand. And I remember hearing that the Tops people who were, they knew nothing about blockchain. Uh, I said most people didn't, and they thought it was digital. And I'm like, it's not digital; it's tokenized. And let me explain that. I got to say, it took 18 months to explain this to these guys. They were slow, but they eventually we launched. I always remember the day before the Tops launch of the Garbage Pail Kids NFTs. I said, "Can you guys send out a tweet just announcing it?" No, and I'm
Ha!
like, "Why?" Well, because it might fail. And I was like, that's a lame excuse. So I thought they would sell out, but it would take a while, maybe 60 days. And they sold out in like 24 hours. And that's really what ushered in this concept of, oh, wow, people really are excited about opening up these packs and getting NFTs. And then throughout 2020 and then 2021, the NFT boom hit. Most people were launching, even at that time, were launching on Ethereum because that's all they knew,
Mm.
right? Keep in mind, when I built with my partners, when we did Wax, we announced it in 2017 and went live in 2018. The most common thing I would hear is, why can't you just use Ethereum or Bitcoin? Why would you need your own blockchain? And trying to explain to those people at the time that because it doesn't scale. And if you do put a lot of traffic on either of those chains, you pay an ungodly amount in transaction fees, gas fees. But it was probably late 2021 where the market finally went, oh my gosh, Ethereum doesn't scale. Now, had Wax launched at that point, it probably would have been very good for Wax, right? Because the zeitgeist was, oh, we need an alternative, low cost, high transaction rate blockchain. But by that time, Wax was kind of old news. It had been out for 3 years. And Solana benefited a lot at that point, Solana and Polygon. Solana benefited mostly, I think, because um, uh, Sam Bankman Fried took like $4 billion of investor money in his exchange and piled it into Solana, right, which caused the price to spike and people to go. It looking at it from my vantage point right now, I think the primary motivation for people to launch a a DApp or a token on a blockchain is that the value, the market cap of that blockchain is very high. So there's like a lot of value in that economy to pull from. And as Solana like has just skyrocketed over 100 billion in value, I think it has first it kind of missed the NFT stuff, but it definitely got the meme things. And you can sort of consider memes to be the 2020 like 5 version of NFTs back in 2021. People do them. It's sort of a highly speculative thing. Heck, even the president launched one. And I think Wax has still, it's a top, I think 5 or 6 blockchain from a transaction volume. Wax does 5 to 7 million transactions a day. Solana is number 1 at maybe 25 to 30 million. Wax was at 25 to 30 million until the NFT business really sank. But it still does. It's got 100 to 200,000 active Wax wallets each day, the DAU, and then 5 to 7 million of transactions, which puts us in definitely top 10, usually top 5 or 6. But where Wax has been hurt a bit is because the market cap of the chain is only 150, 200 million. And if you're going to launch an NFT or I should say a meme coin, and you want to get it to $1 billion of theoretical value, you want to do that on a chain that has enough value represented in market cap to where your meme coin doesn't seem out of whack. What you wouldn't want to have happen is you launch a token on a chain and your token is worth $1 billion, but the underlying chain it launched on is worth 200 million. That seems backwards. So I would say from a capability standpoint, Wax still is an exceptionally good chain, virtually free to use. The Wax wallet really easy to use, and very high transaction volume that it's capable of doing. But if you want to be like in a get rich quick kind of thing, you would probably want to launch on Solana because the market cap there is bigger. So maybe you can suck some of that market cap into your meme coin.
You know, that's very interesting. Let me ask this then, because I know you guys kind of have dipped your toe into the meme coin space. I think first with the Wuffy project, right? So
Yeah, Woofy's been pretty good.
yeah,
Yeah.
and you guys are bridging Solana and Wax, right? So if you have X amount of something over here, because that
Yes.
you're exactly right. If there's billions of dollars of liquidity over here and there's very little liquidity over here, people are going to go over there. So is there maybe more ongoing strategies around looping in Solana and to partnering or bridging Wax through that potentially?
Yes. I think the whole bridging phenomenon, which of course has been an ongoing effort by many chains over many, many years. You have this term EVM, Ethereum virtual machine, Ethereum compatibility. But you'd probably want Ethereum, Solana, maybe a couple of other chains because it just makes sense. The more interoperable your technology, the more widespread the adoption. Right? That's always been true in tech. And bridges have also always been fraught with risk because it's in bridges where often people get hacked, the scams take place. And so, and there's costs, right? Because you're basically swapping one token for another as you move your token from your native chain to the chain you want to go to, and you create some synthetic version of that token on the native chain to exist on the next chain. And in doing all of those swaps, there's vulnerabilities. Mm-hmm. And so bridges have always been an area of high risk. We've so far have not been hacked. We've been slowly building out bridges. I suspect, 5 years from now, virtually every chain will be very compatible with other chains through the use of robust and maybe more simplified chains. There was at one point, what was it? Polkadot was trying to create sort of this universal chain that anyone could go to. I wasn't a big fan of the design of that, and I don't think that's the right answer. For the time being, it'll be chains. And yeah, the more it's like a country, right? As you open these bilateral trade agreements with more and more other countries, trade helps you as much as it helps your trading partner, and that's what I'd like to see with Wax and other chains that I'm involved in. And in the 2025 time period, meme coins, like I said, are sort of akin to the NFTs of the last halving, and so I think chains that allow people to easily create a meme coin are going to do better than ones that don't. And this might be one reason why Ethereum has kind of lost a little bit of luster. And when I say that, it's mostly in terms of the value of Ethereum. It's still below its 2021 high. It hit about $4,800, and it's right now, I don't know, 3,000.
Not
Dropped
even,
recently.
not even. It's
Yeah,
not recovering as quickly as Bitcoin was. But I want to go linger on
yeah,
Wax a little bit longer because a lot of people, put a lot into creating collectibles there, and then people started demanding utility for them. And I think the coin is around 4 cents right now. Even when the market
yeah,
was moving, it wasn't moving as much. I understand that there's possibility with bridging and Wax tokens on Solana and all that, but how do you recreate the enthusiasm for NFTs in the NFT community on Wax so that people, there's a few that are creating things, but we haven't done anything in years because it just seemed like people were leaving. And unfortunately, Wax, because it was virtually free to mint NFTs, kind of got this reputation of being like the garage sale of NFTs or the Kmart of NFTs, which we always thought was a benefit because why pay 30, 40, $50
right.
gas for an NFT when it doesn't cost you anything to mint it?
Yeah, that's one reason I stayed away from Bored Apes and whatnot. And the crypto punks, I'm like, dude, I want to pay $200 for. I got spoiled with Wax. I was like, dude, you can mint how many NFTs for $1 over here? I got to spend this. I was like, no way. Dumb Travis on that one.
Yeah, yeah, and I agree with you. Having been in the game space for so many years, uh, it was unusual for people to be like, "Oh, it doesn't cost as much; it must be better." I kind of looked at it differently, right? I think what happened was uh, NFTs caught on. They caught on by lots of charlatans, let's face it, and lots of like random guys who never heard of what a Bitcoin was, let alone how blockchains worked. And you couldn't really do it on Bitcoin because Bitcoin sucks for most utility functions. And so the next most well-known chain was Ethereum. And since virtually all the people who were building on Ethereum didn't really understand like what you should be able to do in a blockchain and why having a a queue management system that's akin to the Uber surge pricing model is terrible as your chain is starting to scale. They were oblivious to this. So most people went there. And if you thought you could make $1,000 by getting some NFT, maybe you don't care so much that it costs $50 to transfer it. And so I think that benefited Ethereum, and it also benefited Ethereum, of course, that it's a token that was traded on many exchanges, right? Almost all exchanges in the U.S. and outside. So liquidity, the underlying liquidity is there, and that's super important. And Ethereum did have, because it was the first mainstream chain that adopted the smart contract model, they had probably the most developers of any chain out there. And so I think all those reasons really helped drive things to Ethereum. And also, Wax was a new a new consensus mechanism, right? We used the delegated proof of stake consensus mechanism, and particularly in 2020 and 2021, I think proof of work was still sort of in the dogma of crypto people, the thing to do, and even though that doesn't really scale, I think had Wax maybe been proof of work and cost more, perhaps people would, at least the traditional people would say, oh, I trust that more. Because you might remember there was this debate going on really until Ethereum went proof of stake. There was a debate going on that proof of work was more secure, right? And it's a theoretical debate. It's my comment to people was always, a blockchain is so many thousands of times safer than everything else you do online that to argue, proof of work is 10,000 times safer and Ethereum is, or proof of stake is 5,000. It's sort of an academic argument because they're both more than safe enough for you to do work on. But all of those things, I think, led more traffic to go, or more at least dollar-based transaction volumes to go to Ethereum.
William, this feels more like a post-mortem, like you're doing a biopsy on the blockchain. What I want to know is, how does it come back? We know
yeah, but that's
happened.
But that's because you asked me to give you a take on it, right? So that's the reason. Okay. Yeah, it is a post-mortem of what has happened since 2021. Absolutely. Now, when you say, how does it come back? Well, if we measure blockchains by one factor, which is transaction volume, Wax is number 6 in the world. So I guess it could get to number 1, but there's thousands of blockchains and Wax is number 6. So probably on a DAU basis, I assume it's top 10, but I'd have to look in DApp Radar to see that. So will NFTs rise again and become a dominant force in crypto? I don't have a crystal ball, right? So I can't tell you if they will or won't. I think memes are really popular right now, and so chains that have more meme activity will have more transaction volume. And then the other would be DeFi to some extent, right? So chains that are very useful for DeFi will tend to do better as well. What we're doing at Wax, and we've been doing now for the last couple of years, is building more robustness in different areas. The RNG, the random number generation capabilities, we're decentralizing that. We are making improvements in the RAM. You guys might remember, RAM becomes a scarce resource as you scale up the transaction volume. What we talked about earlier, bridging. So we're doing much more bridging to more chains. And then blockchains are cyclical, right? So in the end, we really created Wax to help bridge the digital video gaming market into the tokenized gaming market. And it has taken longer for blockchain-based games to rapidly expand, for there to be a lot more use of them. And that has actually surprised me a bit. I thought the very compelling aspect of being able to control your virtual items, to be encouraged to own and to trade your virtual items, would be a strong use case. And it's conjecture, I'm just speculating that blockchains are still quite, they're a lot more difficult to interact with than traditional digital-based things, digital games, whether they're mobile or console or even PC. So we still need more enhancements in usability. And until that happens, I think it'll be harder still to get large adoption of blockchain-based video gaming. But keep in mind, that's been the reason why Wax was launched was collectively around blockchain-based video gaming and virtual item trading. Within that group were NFTs, but it wasn't launched as an NFT chain. NFTs are just one element within blockchain-based video gaming.
Yeah, I remember meeting you guys back. I think it was Joel and I. We were at the it was D10, D2010 or something. It was
D10E.
D10E conference in it was in Silicon Valley in 2017. That was the first time that I had noticed you guys, and you had a booth there at the event, and it was really interesting to sort of see and then see the evolution from there to where you are now. I want to ask about this because you've been in the game for a long time, Mr. William Quigley.
I have.
And I mean, you were weren't you like the first institutional investor in PayPal or something like that?
Yeah, my firm was, yeah.
Yeah, that's spectacular. And so what I want to know is as we've moved from, traditional finance into PayPal, which was really early digital money transmitting essentially, into Tether. Now here we are with additional stable coins. Now we're starting to see the U.S. kind of deregulate some stuff. And I think you've said this before. What was the direct quote? It's always obvious. It's obvious ideas are obvious after the fact. And so let's put our futurist hat on. Where is the future of money going next? Because we have a friendly administration in place. It seems like more and more countries are maybe going to stable coins. Are we going to get to like a stable coin forex kind of a thing coming up? Like, let's maybe give us 5 years or kind of peer into the future and let's see what might be obvious, but we don't know. It's a mystery. You love mystery. So let's dive into the mystery. How do you think it could go?
Sure. And I would start by saying that the Trump administration is certainly not deregulating crypto. It is regulating crypto. We have been in an anarchy period since Bitcoin was rolled out, since they, went and prosecuted Ross Ulbricht, and then they went after, particularly the U.S. regulatory bodies. They regulated via litigation, and that is really a bad way to regulate, because people have to guess what's okay and what's not okay. And if it's not okay and you made a legitimate mistake, you get sued by one of the regulatory agencies. So under Gary Gensler,
that killed a lot of people's portfolios. They're here to protect your portfolio. Like, no, you actually decimated a lot.
Yes, exactly. Yeah, I mean, think about the harm done to people who were getting nice returns by staking their Ethereum on either Kraken or Coinbase if they were U.S. citizens. That's a perfectly legitimate activity. And Coinbase can do it, or Kraken can do it easier than an individual. And then the SEC, for some bizarre reason, decided to sue both of those companies and said, you can't do that for Americans. It's bad. But the alternative is to let their Ethereum essentially be paperweights and non-earning assets. So that to me was an example of what you're talking about. Through their actions, they were harming the very people they were supposed to protect. And when it comes to the most successful experiments that have happened on blockchains, obviously stablecoins have been the best. Stablecoins are the most traded tokens, and they are the most needed. Exchanges really wouldn't exist in their current form if it weren't for stablecoins. And the reason is because there's no way to do arbitrage trading unless one side of the trading pair is stable. Because if it's not, and both things are moving, you don't know if you're actually ahead or behind when you conduct a trade, because you need a base currency to calculate your gains or your losses in. And so that's the reason Tether became so dominant. And now there are many other stable coins as well, and some of them are in different groupings. Much of the way stablecoins differ between each other is in terms of what the underlying collateral is that makes them stable. I think the best designed is the one I was involved in, which is Tether, and the first one. That's the best designed stablecoin. And others have followed in that, but then there's been ones that have tried to do it a different way, and some of those have wound up crashing and burning. I believed in 2015 when Tether started to get rolled out to different exchanges. I believed it would take 10 years to 15 years for the world's major economies to adopt the tokenization of their fiat currency. Now, that's taken longer than I thought it would. Technically, it could be done in a year, but it took longer. And a lot of that was just education and probably some hard efforts against doing it by the regulated financial institutions, the incumbent financial institutions, who, like any big corporate group, look at any new technology as a threat to their profits. And I would guess that's the case with stablecoins today. There's probably $1 trillion made every year globally in an 80 trillion, now almost $100 trillion global economy. There's probably $1 trillion made by banks and other financial institutions in converting currencies. It's the invisible tax of global trade.
The remittances, that's huge for people who are sending money back to like their
yes.
family back in Africa or something, right?
And what people focus on with remittance, which is just people working in one country, earning money, and then sending that to their relatives in another country, what people focus on is the stipulated fees, the 1 or 2 or 3% transaction fee. That is irrelevant, okay, to these companies, but it's a sideshow that they make you pay attention to. The real money is in the currency conversion, because who really knows what a peso should trade at any given time, or what the exchange rate between the dollar and a yen, right, or RMB or whatever. And those are the major currencies. When you get to these small regional currencies, the capture of value can be over 10%. 20%.
Big arbitrage opportunities. That's why I think
yes,
stablecoin forex kind of a model could be big for arbitrage, but it would almost be like, how much is Bitcoin in Nigeria? It's this much. So then you should be able to figure out based on the dollar. It should almost be algorithmic somehow based on we have
be
a
algorithmic
asset that we all agree upon. It's worth this much and that much. Like, it seems like it shouldn't be so hard, but I think that's where
there's nothing technically. Yes, there's nothing technically hard about it. It comes down to where the resistance points are. The biggest resistance, I think, even beyond the central banks of the world who are interested in experimenting, I think, is the big financial institutions saying, we cannot allow this to happen unless our profit streams are either stable or enhanced from this activity. That's going to be the challenge. Now, the Trump administration came out in one of its executive orders and said that they would put a hold on what's called a central bank digital currency. That's what they call stable coins issued by governments. So Trump wants to put a freeze on any plan to introduce a tokenized US dollar issued by the US government. And I would say that's a mistake. We should tokenize our currency. It's one of the, there are very few things where there's no trade-offs, negative trade-offs, at least to the masses of us. And that would be tokenizing our currencies. It's a very good idea, mainly because we could keep those currencies in their native form and avoid these big currency conversion costs. But
Visa just launched something called their Visa Asset Tokenization Platform, VATP, that will allow banks to really tokenize their own, like the Wells Fargo dollar, the Chase dollar, and to be able to tokenize their own. So is that advantageous? I don't really want a government to tokenize the dollar, because then they say you can only spend it within this mile radius. You've spent too much on beer this month. You can't buy any more of that. When they cut programmable money with that side of thing is what I think scares people.
I think you're right. The scare seems to be that if you tokenize the dollar, the government will be able to monitor what you buy maybe even restrict what you buy. I have news for the world. They already freaking do that. Since the US Patriot Act, a terrible piece of legislation, the US government has been able to know everything you do with your money and to restrict your money wherever they so choose. And there's a particular regulatory rule known as the BSA, the Bank Secrecy Act, that has been getting a little bit more visibility recently, but is an awful thing. It was mainly designed to stop like terrorist financing. And like many things, the corporations have used it to go after their competitors. And so the BSA, the Bank Secrecy Act, is the rules that the bank uses to restrict or cancel your banking relationship with them for no reason. Because what their compliance teams will say is, oh, you are no longer allowed to bank with us. And we're not going to tell you why.
They did that to Kanye. Well, actually, Twitter just did that for one of my business accounts. They said, "Oh, you're suspended because you did something." I'm like, "Dude, we used Grok to do it. What do you mean?" And they don't tell you anything else about it. I'm like, "Hey."
Yes.
So it's not just banking; it's all kinds of things that
I
stuff.
agree with you. It's not just making. I think as companies get to be significant players in a economy, I think there has to be a higher standard for them denying you the right to use their platform. To say it's one thing, let's say a Facebook bans you. You could argue Facebook doesn't have a lot of regulatory power, and you and I guess, could start our own Facebook. See, this is not true in banking. Banks are actually more a governmental body. In order for us to start a bank, we need to get a license from the people of the United States, either at the state level or the federal level. And if we get a state or a federally chartered bank, the people have given us the right to bank, to be a banking operator. I believe because of that, because it's a license the people of the United States give to you, then you should be held to a higher standard. You should be required to give everybody banking access unless there's some specific prohibition. I don't know what that may be. You're a convicted money launderer. Maybe they can deny you. But to be able to just say, which is, I think, unique to banking, they never are required to tell you why. They can just say, in accordance with the Bank Secrecy Act, we're not required to tell you anything, but they're not accusing you of terrorist financing. I think in many cases, this BSA rule was used to deny people bank accounts simply because of their association with crypto.
Right.
And I would like David Sachs, who's now the crypto AI czar. I would like the new head of the SEC, maybe Scott Bennett, the Bissett, the nominee
Treasury.
for the Secretary of the Treasury. I would like all these guys to say, Bank Secrecy Act has to stop being used by banks just to go after people they think could compete with them.
Well, we actually have some breaking news right now along the lines of some of what we've been talking about. Frank Corva with Bitcoin Magazine is on the scene at David Sachs' press conference that's taking place right now. And there's a few tweets. I'm just going to read out here to see some of the things that were said. David Sachs says crypto founders simply want rules. Tim Scott says the golden age has begun. French Hills, a representative, we don't want to be behind in financial technology and digital assets in the U.S. John Boozman says some digital assets are commodities, some are securities. David Sachs is laser focused on bringing certainty to digital assets market. And Tim Scott says we've got an opportunity to get crypto bills through the Senate in the first 100 days. David, again, we're here to provide resources of education for members of the House and Senate. And then these right here, Tim Scott says we're moving first on stable coins. And David says the president asked us to evaluate the idea for a Bitcoin reserve. It's one of the first things that we're going to look at. So there's a lot there, but comment on that.
So I would say those are all things that we have been getting teased, like, hey, something needs to be done on the privately issued stablecoins, right? Because you've got currently almost all privately issued, and then experiments being done by governments on the sovereign issued stablecoins. But it looks like those are going to take longer. We need, someone wrote there, we need clarity. That's like, give me a break. If there was no enforcement whatsoever, no regulatory body asking questions or going after people, I would say, well, I guess it's just caveat emptor, and we'll just go forward. And that's how basically the internet 1.0 worked, and it worked out very well. But that's not what's happened. It's been the worst of all cases. No roadmap for how to be in compliance, and different US regulatory bodies going after people for infractions they didn't know they had made. That Gensler was the worst guy from that regard in the US government. He basically tried to set policy via litigation.
He was a Goldman Sachs lackey, right? I mean, that's one of those, like, the revolving door when you have, these regulatory people coming in. It's very incestuous how, like, the FDA and the SEC and all this, the CFTC, they all kind of just sort of rotate, and then they go out of one deal,
they do
go into a big lobby deal, and it's just obnoxious.
Yeah. And so David is a free market oriented guy, but he understands that you need some rules, right? So first and foremost, what we need is some sort of omnibus regulatory framework. Now, that really should not be done at the regulatory agency level. That makes no sense to me. Crypto is different enough that Congress needs to set that, because Congress speaks to the people. The people have a right to be to voice their opinions to these elected people. If this stuff gets relegated to some agency that is filled with bureaucrats who have no accountability to us, the people, then it's gonna be bad. So what I would like is for Congress to come and say, let's try to create some framework. And job one is going to be designating one of these agencies as having primary jurisdiction over that area of crypto. And it may be Treasury does it for stablecoins, and all other tokens are done by the CFTC. Given what the SEC, the inconsistencies of how they've approached things, I would prefer it not be the SEC. I'd prefer it CFTC. I doubt it's going to be the IRS. So it's going to be one of those three: Treasury, SEC, or CFTC. They need to be primary stewards of this, and then every other agency sort of like follows behind them. If we don't do that, I think you're going to get this, what we've seen so far, different groups trying, you had the IRS say crypto is property. The CFTC said, no, it's a commodity. The SEC, it's a security. And Treasury said it's money. And so which one was it? And here we are in 2025. We still don't have that resolved.
Yeah.
I do think in the next year, I bet it takes just 12 months, we start to get some of this clarity. And this is where a guy like David, who's listening and carrying out the goals of Donald Trump, is going to be very helpful. I think he can go and speak to these agencies and say, this is what the president is looking for, and speak to members of Congress. The fact that we have not widely tokenized fiat so far, other than things like Tether and USDC, just shows how much big corporations have been on the sidelines because they haven't known what's legal and what's not legal. And where goes the US? This is why I'm bullish on what President Trump is doing. The US sets the schedule for what happens in any regulatory world. So if the US comes out and says, this is the framework, very rapidly, the EU is going to do it. And then other countries are going to do it. And then we can have a lot more certainty as crypto people in what we can do in each different country.
Well, let me ask you this, because there's different types of crypto, right? And so it would seem that different types of crypto has different types of classifications, right? So a stable coin probably should be, it's money, right?
It's
Stable coins
money,
kind of money. Bitcoin, commodity, probably, right? I would
probably.
I would say. Well,
Yep.
what about NFTs and what about meme coins? Because it seems to me that when the SEC said, "Hey, you can't have utility because that's a security," then everybody says, "Okay, well, I'll just create this completely worthless shit coin that has no utility, that doesn't do anything." And then conversely, when somebody launched an NFT project that didn't have any utility, people got all mad and upset. But now we got these meme coins that don't do anything, and it's just weird. So how would you even go about classifying or regulating meme coins or NFTs? How does that look?
Well, obviously there has to be a framework, right? As you said, the easy ones are things like maybe a Bitcoin, which is probably a commodity, and stablecoins probably money. And then you have what the regulators might call financial contracts. So that could be a some sort of smart contract that gives you a yield for doing some uh, duty, whatever that is, maybe voting on the blockchain or something.
So maybe
And
it's kind of
then
a
you,
new kind of asset, maybe, or an
right.
asset
And
class or a
so,
regulated class. Yeah.
right. So I think if it's very much being marketed to people as a way to make money, so you've tokenized a real estate project, okay, that's probably a security. And I have no problem with that. But a meme coin, an NFT, a blockchain based video gaming virtual item, these things are collectibles. We've had digital collectibles since the freaking 1980s. Like that was a business I was in, the buying and selling of video game virtual items. It was never a problem. The world existed with it. No one went bankrupt. And so I would like to see a special category of call them tokenized collectibles and NFTs and memes and uh, anything in the metaverse space, that video game items, those are there, and they're very lightly regulated, right? Because they're collectibles. The if you tried to heavily regulate Beanie Babies back in the day, you
Right.
would smother that activity. And people have been collecting probably since societies were formed. They're just digital collectibles. I think when you start touting things like rates of return, promises of financial upside, of course, that's more like a security.
I
The
wonder.
problem with the SEC was it just wanted to call anything done on a blockchain a security,
Mhm.
and it was nonsense.
I wonder if Ty is eyeballing an opportunity to launch Beanie Baby NFTs eventually. So I know you got to cut out here in a minute. So last question for you. I want to talk about the 4-year cycle that we find ourselves now
Mm-hmm.
in year number 4. And there's a couple questions around this. Do you see, especially with the wind at our sails, this is all very bullish news long term for crypto and blockchain. Do you see us having the 4-year cycle where things are going to go ba-boom crazy here heading into the summer and maybe even later in the year? And do you think that we're going to see less overall volatility and the steep sell-offs because blockchain is just moving forward? Everything is moving forward. Are we likely to see less dramatic bear markets and less dramatic bull markets?
Those are obviously, if I knew for certain the answers,
Yeah.
I would be a trillionaire,
Tell
right?
us what to buy,
So
William. Come on.
I wish I knew, but I would say historically, we have crypto people who've been in the game a long time have followed the cycles because much of these tokens were not issuing financial statements, didn't have formal management teams. You can't use the traditional valuation metrics that you use in traditionally traded assets to figure out what's going on in crypto. So a lot more of it was based on sentiment. And so the 4-year cycle around the Bitcoin halving has been a reliable kind of pattern that we've all sort of fallen into. This would be the fourth one since May 20 or April 2024. Historically, these have lasted 18 months. Call that November 2025. So if things were to go as they were historically, we would have had post the April 2024 Bitcoin halving, we would have a slight uptick, which we did, and then one or two strong pullbacks in August and September, which we did, and then a ramp up in Q4, which we also saw. Bitcoin went from like 65,000 to 100,000 in Q4. But then, by my look at the patterns, Bitcoin needed to hit about $300,000 plus in this cycle sometime in 2025 for us to be on track with historical patterns. And then where goes Bitcoin, so goes Ethereum and all the other altcoins. They usually follow about 6 months after the bump up in Bitcoin. Now, we just completed January, and January was lackluster. We're kind of like at 100,000. We've had pullbacks, and then we've gone up to like 110, then down to 95. Hard to say exactly why these things have happened, but I would say this. If Bitcoin is not at $200,000 by end of April, then I would say there's probably a shift in the pattern. If by the end of June, it's not hitting 200,000, then it's unlikely we're going to see that $300,000 Bitcoin price in 2025. Is it conceivable that for various reasons, the bull market has been pushed back 6 months so that is going to happen in 2026? Maybe. But historically, at about 18 months after a bull run, there's a dramatic, steep drop-off where Bitcoin goes down 75% and the other altcoins drop even more. I think
Let me ask this real quick. Is hold that thought there. Did that sort of pre-halving impact that? Because this was out of cycle regularity because those ETFs came on board, and then we had this sort of pre-halving weird bump that we were like, oh my God, we're going to, and then it just, and then, so it's been a really weird cycle already.
Yeah, so obviously nothing is ever exactly as the prior pattern. These are more generalized things. I did note that there was some enthusiasm for ETFs, but I think that should have been kind of washed out, played out by the end of the summer. And so through December, I was like, look, Bitcoin, if it hits 100,000 in December, and I was saying this in 2023, said if in December 2024, Bitcoin's at 100,000, I will be keeping the faith that we're on the prior cycles, which means roughly Bitcoin needed to go about 5x from its pre-halving price of 65,000. So that gets you like 325 or something, right? Now, from this vantage point, I still think that seems quite doable by the end of the year. Remember, Bitcoin doubled it from August to like November. It doubled, right? Like 45 to 90. There's no problem. So Bitcoin has an ability in 3 months to double. There's never been a problem with that. Where I'm starting to wonder is on things like Ethereum. So Ethereum has generally done 2x the multiples of Bitcoin. So Ethereum was at like $2,000 around the halving of Bitcoin. It needed to do not 5x, it needed to do double what Bitcoin's going to do. It needed to do 10x, which would be 20,000. So does it seem to me that that's a hard level to hit? It does. From this point, it's like early February 2025, and I'm like, can Bitcoin hit 20,000 sometime in 2025? I think that's going to be very challenging. If it doesn't, right, that's a long-term problem for Bitcoin. I'm sorry, for Ethereum. And the trade-off with Ethereum was always, it's much more volatile than Bitcoin, but you get a lot more upside potential. Well, if Ethereum only goes up about the same amount as Bitcoin, you would much rather have your assets in Bitcoin because Bitcoin is much more liquid. And Bitcoin usually doesn't drop as much in a downturn. So I think the big loser in this 2025 bull market, if it doesn't go positively, the biggest loser would be Ethereum. And that could mean people just sucking money out of Ethereum. and that's it. I hope that doesn't happen. I'm a long-term holder, been a long-term holder since I was part of the Ethereum crowd sale. So I would like to believe that it's going to do what it's done historically. And then wherever goes Bitcoin and Ethereum, so goes the rest of the alt. And it would be somewhat ironic if, with Trump in power and this very attractive regulatory clarity that guys like David Sachs and Trump are bringing to crypto, be a bit ironic if in that environment we had kind of a modest bump in this post-halvening cycle.
That makes no sense to me for that to happen. There's just too much happening. There's too much adoption. BlackRock's got too much. MicroStrategy's got too much. There's going to be a supply squeeze on Bitcoin, and it's going to drive. I mean, we're already in the early stage of mass adoption, and retail's not here yet. So I'm going to remain wildly optimistic that the best is yet to come.
Yeah. But it could be hard for Ethereum. You're right. I mean, I think, William, Ethereum is in this weird flux state right now because they went from the proof of work to proof of stake. They've not seen those all-time highs since they moved from proof of work to proof of stake, right? And so I think that, I don't know if that's part of the problem or what, but I know that your time is about up. You got another meeting on.
Well, the only thing I'll say that's exciting is 2025 is this is the year, right? It's what we have every 4 years. This is the year. So we will know all the answers to our questions. We will know by November, December. We will find out if the cycles are going to continue. And it could be, I forget which one of you mentioned this, it could be if we don't have this tremendous increase in value like we've seen historically, that the decline in 2026, 2027 is also more modest, right? That would be a little bit of a consolation. Let's say Bitcoin only pulls back 25 or 50%, not 75%. Obviously, the worst case would be it pulls back 75%, having never really taken off in this cycle. But like you guys, I see no reason for that. And at this point, I think we're still on that 300,000 Bitcoin price in 2025. I'm less optimistic about Ethereum hitting 20,000. I hope it hits 10 to 12. And then every other token follows suit. Because they're like all those. Highly correlated.
Those prognostications make me happy. We'll see if you're right. William Quigley, always happy to have you on. Where's your favorite place for people to follow you to keep up with your thoughts and ramblings?
I guess it's Twitter. I'm not terribly active on social media, but it's mostly Twitter. Yeah.
Right. We'll get a link in the show notes.
William E. Quigley.
We'll get a link in the show notes so people can follow you there. And thanks again, good sir. We appreciate you.
Good talking with you guys after a couple of years.
Yeah. Okay, now we can get back to football talk if you want to on the Bad Sports Ball podcast.
Welcome to the Bad Sports Ball. Hey, if you do like sports, me and a couple of friends are doing one called the fanbase.io because I realized I was just always staying in my house too much and never seeing my friends. And so I was like, so this is kind of fun. I got one of my friends, Lance, I've known since I was 10, right? And that is crazy. He's like ridiculous when it comes to sports betting. He's like 70+% winning on this whenever he does research on it. It's really obnoxious. So I said, you need to come on and talk about it. And then Moser, I've known him for about 30 years. He's like a comedian. He's one of the funniest dudes I know. And then Marty is one of the guys who was the co-founders of the Save Our Chiefs movement that I was a part of back in 2012 when they awarded us Super Bowl rings. So it's pretty crazy. So we're launching the fanbase.io if you like sports ball stuff, we're sitting there and we're chatting, cracking jokes. So I'm probably more of a smart ass over there at this point now, but having fun with that. That's where I'll do all my sports ball most of the time.
You need to up your smart assery game here on.
Okay, I'm gonna try.
That was great speaking with William again, and so he's saying, by his estimates, Bitcoin should hit 300,000, and he's a little sad about Ethereum.
Yeah,
as am I.
Right. It seems right. I don't think Ethereum will ever see 10K again. I don't think it'll happen because Solana's taken all the liquidity. Because
it's never seen 10K. What do you mean again?
Mm-hmm.
I'm just saying the thought of it hitting 10K is not going to happen because in the days of Ethereum, Ethereum was the only game in town aside from Bitcoin, right? Whenever it was doing that pump, all those NFTs, they were all on, for the most part, on Ethereum, the big ones, Crypto Punks, Bored Apes, Pudgy Penguins, all those, the ICO days, everything was on Ethereum. And now all of that liquidity has gone over to Solana. And so I think that if Wax wants to do something and make it fun, which is the collectible game, memes and NFTs, they got to do something big with Solana and connect the dots somewhere with that. And I hope they figure it out because we are big Wax holders and big fans of that ecosystem.
I
And
did not get the answers I was looking for there, and I wanted to, make sure we could talk about some other things as well. I wanted to press them a little harder on Wax because, with the market cap being so low, it's like, where does it go from here? And I wanted to ask him if he regretted going from an ERC20 to the EOS forked version
yeah,
of Wax.
that probably, well, but EOS looked like it was going to be the big hot thing. It raised
And
$4 billion.
you couldn't have done what you did with Wax Packs on the ERC20 at the time because it just there wasn't a side
That's
chain.
why they did it. Yeah. So
I don't know.
it is what it is, and it's all a learning game in the game of crypto. And it's my regret is that we didn't, dive into more of those big NFT projects because there's no reason why we shouldn't have had 10 bored apes each. You know what I mean? Because we launched NFTs before anybody was talking about NFTs. I just sort of stayed away from all those. And to this day, I think the reason NFTs on Ethereum popped so big was because of Gary Vee having that Zoom call telling all these guys to go out and buy crypto punks, and they all bought up and popped up the price. And then next thing you know, he launches his deal. Very smart marketer, that Gary Vee guy.
Indeed, he is. Appreciate you guys. Thanks for listening, watching, tuning in, being a part of our little family here at the Republic of Bad Cryptopia. We will catch you the next time we catch you, which will be next week because we do weekly shows. Until then, stay bad.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.